Hello and welcome back to the channel. Today we'll be diving back into one of the stocks that I was looking at and which I have a favorable view on. And in terms of what I've seen and in terms of the developments that have been taking place, and in terms of where the company stands, I really like the look and feel of the stock. Although I do keep supplementing my analysis, my belief on that stock with supplemental analysis, and depending on that, I did do tend to present um, an allocation to the stock or present so which are my top 10 favorite stocks or top 15 favorite stocks. But yeah, rights, I won't say it's a great business, but it's definitely between the grade of good and great, in my opinion. We'll do a quick highlight of this company. So we can see that the company is trading at a 17,000 crore worth of market cap. It has orders in the range of 7 to 8,000 crore worth, and it's also going to get a significant push from some of the government measures that are being taken. So first of all, rights is Railway India Technical and Economic Services service. And some of the moves that are going to benefit rights is definitely one of the covered system. So within the rail network, there have been a lot of accidents that have been happening, and um, the past government or the current government, I would not comment on my political inclination or those kind of things, but they have done very little to ensure that anti-collusion measures are placed for the railways appropriately. And this is going to receive a heavy allocation in terms of a priority. This can make or break the government because railway accidents are taken very seriously, and rights is definitely one of the key implementers. So just to give you an idea, to depute like to incorporate 1 kilometer of covered system, it takes a cost of 50 lakhs. Earlier this was coming from foreign countries and it used to take 2 crore for 1 kilometer. But if it is within the locomotive, it takes 70 lakhs per kilometer now. And outside the locomotive, it is 50 lakhs per kilometer. So looking at the railway, 6 lakh crore worth of 6 lakh kilometers of rail tracks that we have, one of the highest in the world, second highest in the world. It's going to be taking a lot of allocation over the years. So this is just one of the segments. So we'll quickly look at what RITES does. RITES is a public sector enterprise and a leading player in the transport, consultancy, and engineering sector. It has done work all across the globe. It is not only limited to India, and we'll see quickly the split between consulting and construction and those kind of things, and how what is the split between competitive and non-competitive business. It also provides railway rolling stock. It also is it also has a subsidiary company, REMC, which overlooks the power supply to railways and the open market procurement of power for the railways, and also to see the mix of renewable and non-renewable power that is available for the railways. Some of the key products and services for rights are as follows. So locomotives, coaches, trains, and wagon sets it provides to various countries. It does viability reports. So if a highway is being built, what is the viability report of the highway? What will be the cost of the highway, and those kind of things. It also does EPC, and EPC stands for engineering, procurement, and consultancy, and it provides services like management consultancy on covering various sectors of railways, metros, airports, land ports, highways, ropeways, urban planning, and infra. It is also, in my video I had also mentioned that it is working on a lot of ropeway projects, and a lot of ropeway projects are coming up in India, and rights is one of the dominant players in grabbing those tenders. Although the one thing that is not working in rights favor is that earlier what used to happen is, because rights was one of a kind railway specialist, and it really there was not a lot of competition. So earlier what was happening was it was getting most of the projects on a nomination basis, but now the projects have begun to move to the competition basis. So as we'll see that 61% of the projects that rights gets now is on a competition basis rather than a nomination basis. So here we can see that the consultancy services um, in FY23 was 47%, and for the 9 month of FY24 is currently standing at 51%. Turnkey or EPC, which are the lower margin businesses, it's making a conscious effort to decrease it. although here you can see that it has increased, and this has something to do with also the component where the exports have decreased. So here, as you can see, that 12% was export and 5% is for the 9 month of FY24, and this has led to the percentage for the turnkey increase. But there has been a conscious effort in decreasing the turnkey, increasing the consultancy, which is the more higher margin, uh, writing reports and providing most on the service oriented part rather than being involved in the construction part or the engineering procurement and consulting engineering procurement part. So as you can see, the leasing. So leasing, what it does is it leases locomotives, railway locomotives to countries in Africa. So Mozambique and these kind of Zimbabwe and these kind of countries have a lot of depots of coal and other raw materials, and it needs locomotives to transfer coal and other minerals from the from the place where it has been mined to ports and where it needs to be supplied to be processed. So they are looking at it really seriously in terms of hiring somebody who's an uh, expert within the domain, and they have selected rights for it for the leasing part. In terms of its geographical presence, the dominant part is within India, and India, there's a lot of capex spend which is happening within the railway sector, and railway and defense combined together form some of the major spendings that are earmarked for the budget. As you can see, Africa is also becoming one of the higher parts, because Africa is not that developed of a railway network, and they're not really looking at speed rails and those kind of things, where the other Asian counterparts like China and Japan are highly proficient, but they're looking at the locomotives the way we have it majorly in India. No, right now 99% in India, and they are looking at something like that, to that some locomotives which can be repaired and be given to them, like more of a second hand locomotive market, which is then provided to them to generate additional revenue. Asia, very small percentage, 2.5 percent. It was also working on the Bahrain metro project. So companies, countries globally, in terms of what RITES has to provide, is looking at RITES as a very competitive player in this field. It has worked with the Delhi Metro, and Delhi Metro is an expansive network of metro. So some of the smaller countries, like Bahrain is one of second smallest countries in the world, and in Asia, and they are building out the metro. And when they are looking to hire a consultant, they are looking at RITES and giving them good revenue. So the company, as at December 2023, has an order book of 5496 crore. As you can see, the consultancy makes up the major proportion, 48%, and it's continuously pushing its boundaries to go beyond 50%. This is as of December 2023, but as we see updated figures for the presentation as at March 2024, we'll see that this number is higher. Turnkey project is 42%, 177 crore worth of leasing. REMC is the power subsidiary, railway power subsidiary of RITES, and exports are worth 5%. So company received further orders worth 1247 crore during 9 months of FY24. And the clientele, as you could guess, Indian Railways is one of the biggest clients for RITES. SAIL, also because SAIL is looking at locomotives to transfer a lot of steel that it produces from one part of the country to another, and also a lot of viability reports and those kind of things that RITES does. Tata Steel, NHI, Mozambique, ICF in Chennai. So as you can see, the company is focusing more on consultancy services. It is focusing on tapping the emerging opportunities, export and consultancy in Southeast Asia and Africa through its strategic initiative called RITES Videsh. So here we'll have a quick glance at the numbers. The market cap, as I mentioned, was close to 17,000 crore, running at a reasonable price to earnings of 40.2%. Profit has seen a slight decline here, of 16.8%, but the profit after tax sits at a healthy rate of 426%. As we'll see, the OPM percentage is also at a good rate of 25%, which will face pressure due to the shift from competition to nomination. And as competition comes in, more and more tenders will need to be priced in at a more lower cost than what it would have been in terms of the nomination basis. So the OPM percentage should see some pressure. But in terms of the opportunity and in terms of the things that are happening, in terms of the infra push that the current government is also placing, there are a lot of projects being deployed. So for example, during so there's the project of the corridor between India and running through the Middle East and connecting Russia and those kind of things will definitely aid RITES in terms of its order book. There is currently no pledge. In terms of the ROC and ROE, it looks healthy at 24.8 and 17.5%. Dividend is at 2.85%, which is quite significant. And as we'll see that in one financial year they gave out dividends worth 500 crores. They have a cash equivalent of 3141 crore and a market cap of 17,152 crore. So that gives a relativity as to how much is the market cap and how much is the cash equivalent and how much is the order book. So market cap is sitting at 17,000 crore. Order book is sitting at close to 6 to 7,000 crore. And we'll just look at the annual revenue and what percentage of the order book is the annual revenue. There is no debt currently in the company. The enterprise value is 14,000 crore. The book value is 109, and the stock is trading at 714. So when we look at the price to book value, it's around 6.61, which is on the higher side if you're looking at a value investing style of picking up a business. In terms of the price movement, so we'll quickly see the price movement. So it's growing at a healthy rate in terms of the price movement. We'll see the CAGR returns on this below. Yeah, I think we'll skip this part because I don't think these are like-to-like comparisons. So for example, GMR in airports is not at all. It does a part of what RITES. So it does not at all do what RITES does, and even HFCL and those kind of things. So these are not appropriately placed by screener. In terms of profit and loss, we've seen some stagnancy in terms of the revenue that is being generated. So earlier it was 2,600 crore constantly, and from there we were expecting a breakout in terms of what the infra push is happening, but that didn't seem to happen. We're currently sitting at 2,400 crore, and trailing 12 months is sitting at 2,400 crore. The OPM percentage as well, as I was speaking, the shift between competition and nomination, you can clearly see it here within the numbers. So it was 29%, 27%, and as it was more and more nomination basis, you can see that it was in the higher 20s, and now it's beginning to come to the lower 20s. But yeah, you can't outrightly reject a company based on the OPM percentage decreasing from the high 20s to the lower 20s. Also, given the fact that your base is increasing, the revenue has remained stagnated. But if the pie from here on keeps growing, which I do believe it will, it'll be interesting to see even at these low OPM percentages, it generating a significant PAT. So here, as you can see, the EPS was sitting somewhere close to 20, 24, 27, and then declining towards the 17s. So this is what we're talking about. The sales growth has been quite muted in terms of what we discussed in the revenue numbers. 10% for 10 years, it has been 8% CAGR, 4%, 9%, minus 7% here. Profit also has been quite muted, but the stock price is growing. In the last 3 years, it grew at a 38% CAGR, and a lot of investors are pricing in discounting the future growth potential of the company. And they have placed a lot of faith in how it'll go, because in terms of it being translated to the accounts, it is not being translated as of yet. But a lot of experts, a lot of shareholders, a lot of investors do believe that this will translate, and what they have predicted in terms of the price growth in the future, and while discounting it from the future, they believe that there's significant value in the business. So we'll quickly, I think, look at the notes of the June 2024 con call. So they held a conference call to discuss the financial results of the quarter and year ended on 31st March 2024. The management team included Mr. Rahul Mittal, who's the chairman and managing director. Financial performance, they've clearly mentioned it, and as we can see it from the numbers as well, they faced challenges at the beginning of a year with a low order book and impact of change dynamics in quality assurance business. Successfully secured 2 export orders with 1,200 crore from Mozambique and Bangladesh. Managed to diversify the quality assurance business. Project consultancy revenue increased by 10% year on year, reaching all-time high of 1,300 crore. expects to see substantial growth in EBITDA and profit for the next financial year. So that is what the shareholders are really betting on. They're betting on that this company, although it is muted right now, and the price to earnings is also muted, in moving ahead, moving into the future, it should see significant value being delivered. So here you can see the export orders, receive orders from Mozambique, 300, 900 crore, I think 1200 crore worth of rolling stock, expects revenue realization from Bangladesh order to start by Q3 and Q4 of FY25. Orders are expected to be executed within 2.5 to 3 years, aiming for early revenue realization. Consultancy order book stands at 2600 crore, shifting to a competitive mode in the quality assurance business, resulting in tighter margins. This was one of the key things I think which I highlighted, and this I think any wary shareholder should be wary of. But also, just on the basis of this, rejecting a particular stock is also not right. And you need to form a balanced opinion. You need to see the pros and cons and then take a call accordingly. It is totally up to you, and whether you place it as your favorite stock or your 10th favorite stock or 7th favorite stock is depending on the quality of analysis that you do. And things like this. So suppose if it was sitting as my 6th favorite stock, this point in itself would place it at 8th or 9th. But you also need to look at relatively the amount of stocks that you have within your purview and the quality of analysis that you're feeding into it. Depending on that, where does that stock sit? And depending on that, the allocation needs to be accordingly. So your first favorite stock should have a higher allocation if you have 100 rupees. And so fear and knowledge are really inversely proportional. The more knowledge you gather on a particular stock, the less fearful you will be, and you'll be able to then allocate more amount. And that really is key, because um, a 50% gain on 1 lakh is minuscule, but a 50% gain on 30-40 lakhs is something very significant. So the amount of investment so when we learned compound interest in our school, we know that the formula was P bracket 1 plus R to the power T. Everyone's focus is on R. What is the rate of return? But the most important part is the T. How much are you willing to hold that business? The business will go through downturns, the business will go through fluctuation, but what is the time period you're willing to invest? And also the P, what is the amount you're willing to commit? If you're not willing to commit a good amount, or if you're not hired a professional who can give you enough confidence to hire a good amount, then you're losing out a lot. Coming back to RITES, in terms of the future outlook, they are positive on the RITES Videsh initiative. So challenges and opportunities, they did mention that they're facing competition, the leasing business with more players entering the market. Margins in the turnkey project business range from 3 to 4%. And just imagine that turnkey being, as we had seen, 38% of the business contributing 3 to 4%. And weighted average wise, the OPM percentage is still sitting at 25%. So you can imagine the kind of margins that the consultancy part is delivering. Because if it wouldn't be delivering those kind of margins, then the turnkey projects would, there was no case for picking up turnkey projects. But you cannot outrightly say no, because these have associated impacts. So you will get a part of turnkey projects, and within that turnkey project, you will have consultancy projects. So it's like a bundled service that you're providing. So expecting a healthy growth in EBITDA and profit of the upcoming financial year, all management say that. Focus on increasing the ticket size of consultancy orders and maintaining a 1 order a day trend. Yeah. So I'll end my analysis here. Let me know what you think about the analysis. Also, do let me know some of the stocks that you want me to look at. Hope you have a great day ahead. Thank you and goodbye.